wonderful moms. Welcome to my channel Mommy Money Talks. Having a baby is life-changing, and thankfully, Canada offers some amazing tax benefits to help ease the financial burden. But to reap all the benefits, you need to know exactly what's available and how to claim them. Today, we'll cover everything you need to know to maximize your tax benefits when you have a baby in Canada. Remember, this video is just for entertainment. For the most accurate information, visit the CRA website or contact a tax advisor. Let's get started on what we are having today. 1. Canada Child Benefit (CCB). First up, the Canada Child Benefit or CCB. This is a tax-free monthly payment to help families with the cost of raising kids under 18. Here's how to make sure you're getting the most out of it. Eligibility. You must be the primary caregiver, reside with the child, and be a Canadian resident for tax purposes. How to apply? When you register your child's birth with your province, the CRA will automatically enroll you for the CCB. If not, you'll need to fill out Form RC66, the Canada Child Benefits application. Amount? The amount you receive depends on your family income, the number of children, and their ages. Lower income families get more, but even middle income families can benefit significantly. The new maximum payments for the 2025-2026 benefit year will be children under 6, $666.42 per month. Children aged 6 to 17, $562.33 per month. This increase, based on 2024 tax returns, will roll out automatically for eligible families, ensuring higher payments from mid-2025 onward. Pro tip: make sure you file your taxes every year, even if you have no income. The CCB is based on your tax returns, so missing a year could mean missing out on payments. 2. Childcare expenses deduction. Next, let's talk about childcare expenses. Did you know you can claim these expenses even if you're paying a family member, like your parents, to take care of your baby? Here's how to do it right. Eligibility. The payment must be made to enable you or your spouse to work, attend school, or conduct research. The caregiver must provide their social insurance number, SIN, for tax reporting. The maximum child care expenses that can be claimed per child each year is limited to $5,000, $8,000, or $11,000, depending on the circumstances. The lower income spouse must claim the deduction unless they are a student, disabled, or separated. Keep records. You'll need detailed records, including a written agreement outlining the childcare arrangement, hours, rate, responsibilities, receipts or invoices from caregivers, proof of payment like bank transfers or checks with clear descriptions like childcare for child's name. Claiming on your tax return. Use line 21400, childcare expenses, on your tax return and fill out Form T778. Include the total amount paid, the caregiver's name and SIN, and the child's details. Tax implications for caregivers. The money you pay to your parents or caregivers is considered income for them, so they'll need to report it on their tax return. They can include it on line 10400, other employment income, or line 13,000, other income, depending on the arrangement. Important note: payments must be reasonable and reflect fair market value. The CRA may question payments that seem excessive. 3. Medical expenses for your child. You can also claim medical expenses for your child, which can add up to significant savings. Here's what's eligible. Eligible expenses: prescription medications, dental and vision care, medical devices like glasses or hearing aids, and premiums for private health insurance. How to claim? Use line 33099, medical expenses, on your tax return. You can also transfer unused amounts to your spouse.
Pro tip: combine medical expenses for the entire family to maximize your claim. Keep all receipts and documentation in case the CRA asks for proof. Claiming medical expenses based on receipt year general rule. Medical expenses must be claimed in the tax year they were paid, based on the receipt date. For example, Expenses paid in 2023 must be claimed on your 2023 tax return. Or another way is 12-month flexibility. You can claim expenses paid in any 12-month period ending in the tax year. For example, for your 2023 tax return, you can claim expenses from December 1st, 2022 to November 30th, 2023. Why this matters allows you to maximize your claim by choosing the 12-month period with the highest expenses. 4. Child Disability Benefit, CDB, and Disability Tax Credit, DTC. If your child has a disability, there are additional benefits you can access.
Child Disability Benefit, CDB. This is an additional tax-free benefit for families already receiving the CCB. To qualify, your child must be eligible for the Disability Tax Credit, DTC. Disability Tax Credit, DTC. If your child has a severe and prolonged impairment, you can claim the DTC to reduce your taxable income. For 2023, the federal DTC is $8,286. If your child has no taxable income, you can transfer the unused portion to a supporting parent. How to apply Submit Form T2201 Disability Tax Credit Certificate to the CRA. Once approved, you'll automatically be considered for the CDB. 5. Registered Education Savings Plan, RESP.
Planning for your child's future? An RESP is a must. Here's why. Government grants. The Canada Education Savings Grant, CESG, matches 20% of your contributions, up to $500 per year with a lifetime limit of $7,200 per child. So if you put in $2,500, you'd be eligible for the full $500 in grant money available each year.
Tax benefits. While contributions aren't tax deductible, the investment growth is tax deferred. When your child withdraws the money for education, it's taxed in their hands, usually at a much lower rate.
Pro tip: start early. The earlier you contribute, the more time your investments have to grow. The carryover feature. If you don't get the full grant amount each year, any unused grant room accumulates and carries forward until the year a child turns 17. You can go back 1 year at a time to make up for missed contributions.
Tax season is here, and it's time to get prepared. The more organized you are, the better your chances of maximizing your tax return. Gather all your receipts, documents, and records, whether it's for childcare expenses, medical costs, or RRSP contributions. Every dollar counts, and taking the time now can save you a lot later. And speaking of RRSPs, here's a fantastic opportunity to boost your retirement savings while getting a head start on next year's taxes. Wealthsimple is currently offering a 2% match on RRSP account transfers before March 15th. Transfer at least $15,000 to qualify for that program. Plus, if you register through my referral link, you will get $25 bonus, and I will get the same amount too. It's a win-win.
Alright, that's it for today's video. If you found this information helpful, give this video a thumbs up and share it with your friends and family. Don't forget to subscribe to the channel. For more tips on saving money, maximizing your benefits, and making smart financial decisions. Thanks for watching, and I'll see you in the next one.